Hello, my name is Kirill Perelyguine. I'm a real estate broker with Royal LePage Commercial in Toronto. Welcome to my new video blog dedicated to commercial real estate. Today, I would like to discuss some legal aspects of real estate transactions and changes in commercial financing due to COVID-19 pandemic. My guests today are business lawyer Pavel Malysheuski and commercial mortgage broker Daniela Peeva.
Thank you, Kirill. It's a pleasure to be part of your video chats. My name is Daniela Peeva. I'm a lawyer by trade, but I've been doing commercial mortgages and fortunate enough to work with the biggest commercial brokerage in Canada, Mortgage Alliance Commercial. I've been doing commercial loans financing with the company for about 4 years, and prior to that, banking law. And I'm happy to share with everyone what market changes we're experiencing post-COVID-19.
Okay, thank you, Daniela. Pavel?
Hi all, my name is Pavel Malysheuski. I'm a business and real estate lawyer practicing with the law firm of Full Service Locker and Heim. That's our firm. We're servicing clients in Greater Toronto area and beyond, and one of my specialties is commercial real estate deals.
Perfect.
That's why I'm here.
Thank you, Pavel. Thank you, Daniela. So, I guess we all know that there are some changes in the market. There are changes in the situation right now. From my perspective, from my point of view, today, I would like to say that the market has not stopped completely. I see a solid interest in triple net properties with solid, like a food or drug pharmacy tenants, as well as self-storage facilities. So, Pavel, how did it affect your business? Like any rent deferrals, anything?
What I see now in this COVID-19 times, and specifically in commercial real estate, first I see a number of purchase deals that I represent. I act for the clients. They're put on hold. And that's for a number of reasons. One of the reasons is the change in mortgage landscape. So that's COVID is changing a lot of parameters here. And also, particularly the properties with commercial real estate properties with retail business tenants in this property. That's again, creates a huge contingency, big question mark for the lenders. So that's, I have a number of deals that are now put on hold. And another tendency in commercial is the industry. So that's, I've seen clients on both sides, landlords, commercial landlords and commercial tenants, renegotiating their lease terms, specifically either reduction or postponement of rent payments because of the situation. Because we're all in the same boat now. Yep. So that's what I've seen in the States.
Definitely. Thank you for that. Daniela, I understand your industry was affected probably the hardest as well with the uncertainty and with all the money situation right now. Can you elaborate?
Yes, I'll definitely agree with you. A lot of things have changed since this health crisis started, including lenders' positions, and some lenders are backing out. They're not funding any deals. They're canceling commitments. Pricing has changed. There is a wrong perception that because the rates are going down in the residential area, commercial is lowering as well. This is a misconception. Commercial, if anything, is increasing over the CMB and GOC bonds. What we know from pricing today will be completely different tomorrow. There is a lot of uncertainty with the lenders, the borrowers, and the entire market. Different asset classes are underwritten completely different to what we used to know and how we used to perceive it. One of the biggest changes, of course, is the other professionals involved into closing a commercial transaction, including appraisers, environmental specialists, timing has increased tremendously. So people have to be prepared for that. We're doing a lot more refinance versus purchases. For that, there's a lot of talks in the media about deferral requests, which commercial owners should know the reality behind what the deferral request is and how it can affect them long term. So definitely a lot has changed, and the market is nothing like we have seen before.
I see. Thank you. So you have mentioned that there is still the deferral is happening, and even in the commercial space. Is it like, do you see a lot of this type of requests, or it's just small one-offs?
So borrowers, what lenders are communicating and sharing with us that April's deferral requests were not as high as what they're experiencing and what they're anticipating for May. A lot of the landlords, as Pavel shared, has applied solutions as last month rent or some sort of solution to carry on April. Now it comes May, the lenders are seeing a lot more deferral requests. And when a commercial owner is considering taking a deferral or doing a deferral request, they should know that that will affect them a long term. There might be certain classes that are suffering a lot more than others, including retail and hotel industry. But if you're carrying a portfolio with diversified assets, please make sure that the other asset classes takes over the ones that are suffering, because you will need the lenders tomorrow. And if you request deferral, the lender looks down on you as you don't have the capacity to carry your own loan. So there's not many lenders. It's not US where you can at any given point of time rely on different lenders, and different lenders come in and out of the market. These relationships should be really protected, and deferral should be your last option, not the first.
Okay. Thank you, Daniela. Yeah, I think this is the feeling in the industry as well. Pavel, like, from your perspective, I think this is what you recommend as well, to try to just find a solution without a deferral.
That's absolutely, of course. That's if you can, yes, that's the measure of last resort. If you can somehow keep on your schedule payments, that's yes. And obviously negotiate with your vendor.
Yeah, thank you. So I just want to briefly touch on what has changed since the pandemic and the situation with the services that we now can provide. The situation is that like most of the due diligence, as Daniela mentioned, it cannot be done right now. Soil testing, like building inspection, they has to be deferred, and this creates problems for us, for real estate people. Mm-hmm. We cannot do showings right now. We cannot really, well, at least we're not recommended. There are several things that we should be avoiding doing at all, and this is mostly like for the purchases. It's mostly a virtual tours, even for industrial properties, and sometimes what we have to do is just extend the due diligence for another 100 days, 120 days, 200 days, and just wait for this situation to go through. Pavel, like, from your perspective, what kind of changes have you seen in your field?
On the procedural side, and that's probably the question people are most often asking us lawyers these days, is how we close deals in this self-isolation situation. And what we do is we close deals virtually. I mean, that's what we're doing right now. That's Zoom, it's WhatsApp, it's Skype. So we sign clients, we execute all the paperwork online through this audio visual means, and that's the biggest change. We stay away from clients are staying away from us. Physically. Of
course, yeah.
Now we communicate through this virtual means. So that's we close deals virtually. We execute wills, powers of attorney virtually. So that's that's the realities of the day today.
Okay, thank you, Pavel. Daniela, I guess again from your side, what would it take for me to get a mortgage right now, either for my own use, for corporate use, or for an investment? I guess it has changed a lot.
So the first question I would ask the borrowers coming with requesting this information will be what kind of asset classes. That really changes the perspective. So I will share a little bit more with the ones that are hit the most. So when we talk about construction and land, this is completely paused. So what I recommend to clients is don't wait until the doors open and everybody jumps back online. Let's underwrite the file, let's review it, and let's submit it. Let's be the first one on the line when the lender releases their doors and start lending back on construction and land. So lending construction for now, none of the lenders are pretty much lending. Retail, they're discounting a lot of the retail components of a plaza. There's some lenders, especially in the apartment building space, that have completely stopped lending for 2 months or probably more. Sorry, and of course, hotel, it's a no-go. If you have a hotel you want to purchase, use your own funds. So these are the major asset class that have been affected. And the other big change for owners that they're looking for investment is a quotation. When you ask your bank to quote your pricing right now, please don't. When you're ready to submit, then get couple lenders involved, get quotes from all of them and bid them against each other. Because what one lender quotes you today, tomorrow can be completely different. And I'm not talking about 20 basis points. I'm talking about 50, 80 basis points. For the same asset class, I'm getting a quote of 1.8 versus 3.2 from lenders that used to be competing in the same space, offering the same pricing. So things are very, very much unstable. What one lender perceives others to be doing, they're completely wrong. So you have to show them. So it's really important at this time for you to play or be involved with as many lenders as possible so you can have control over your file and over the market day by day.
Okay, thank you. Is CMHC still lending on the same type of rules and regulations for, I guess, multifamily apartment buildings? I understand that the land development probably has stopped, or construction for multifamily has stopped, but what about land development for multifamily?
So for multifamily, CMHC are very active. They're faster than for what they have been in the past 18 months. They're issuing a certificate of insurances for borrowers. They're very, very active. What has changed, though, is the lenders available to fund this product. So if there were 6 very active lenders in apartment building before, now there are probably 4 or less. So that has created a lot of confusion and, of course, price changes and time issuance. So it used to be the case where you have a COI in your hand and you submit it to a lender and you have a commitment within 48 hours. This now has changed to a week, 2 weeks, 3 weeks. So closing is being slowed down now, not by CMHC, but by the lenders themselves. And
Daniela, if you can just elaborate a little bit for those of our viewers who are not familiar with the terms. The COI is what?
This is the certificate of insurance, so that you're getting from the government to insure your loan, and that's what COI stands for, certificate of insurance. It is the procedural process where you will submit a file to a lender. The lender submits your file to CMHC, get a certificate of insurance, and then is ready to fund your loan. If you use a broker, there's only a few brokers in Canada that can do that for the lenders and not be stuck with a particular lender that in pricing that they're giving you. So that's what I was referring to, COI and certificate of insurance.
Thank you, Daniela.
You're welcome.
So for, I guess, another big challenge that I see is there's been a talk about, like in my field, at least, we are suggested to use certain clauses in our agreements of purchase and sale, such as it's a force majeure clause that if something happens, then the deal falls apart. And Pavel, I remember that you have mentioned that this might not be necessary in a transaction. Can you elaborate a bit on that, please?
I've been asked a few times by clients, both on the purchaser and the vendor side, if it could be a good idea to include now in the agreement of purchase and sale of a real estate property, how they call the COVID clause, that if for any reason this COVID pandemic will affect the ability of one of the parties to close, that the agreement would be terminated, the deposit would be returned, which means that would be like a safe exit for party. So people are asking if it could be a good idea to include it. And I will say that there is like no one solution, no one size fits all. Because the reason is that the force majeure, or in lay person terms, the circumstances beyond our control that make this the performance of the agreement just impossible. So it's called the inability to perform. It's a fundamental feature of a contract law, so we don't need to include it in the agreement to use it. So that's already there. So it's fundamental inability to perform. It's a force majeure. It's frustration of the agreement. So that's different terms describing the same situation. When we are not able to close, not because we don't want. So that's circumstances beyond our control. So you don't need to include them in the agreement. And I understand that people want some peace of mind, want to include this COVID clause, saying that if I somehow contract this disease, if I'm in the hospital, if I cannot close and so on. So first, it's already covered, it's already in the contract. Second, this specific clause with the, so it can do more harm than good. So it can include in this clause, can open a Pandora box of multiple interpretations. This, if one party wants to resile the cap from the deal and somehow use it, so that's who is to interpret what's outside of our control, what's reasonable, what's not reasonable, and so on. So I would recommend first not to include it just blindly. No, don't do it. Speak with your realtor, speak with your lawyer, because that's it can be one-off situation. There can be specifics. So my advice: don't use this COVID clause blindly. So as I said, it can do more harm than good.
Thank you, Pavel. Daniela, on your side, like, is it like, I understand that it's never this. There's no one size fits all situation, but is there a situation when you see a lot of files open up on the last moment from the underwriter, from the financing body?
So what I have experienced is a lot of deals are flowing into the market, and the lenders do not want to pick them up. I'm experiencing that, but it's not because of the lack of lenders, but because lenders are changing on their appetite. There are lenders that will pick those files up, where the pricing is going to be and what the terms are going to be. That's fluctuating day to day, but their solutions to all the problems is just changing of who is lending. So for the borrowers to have as many partners as possible, knowing more lenders than ever, this is the moment. This is the time, because as in any financial crisis, history shows is that there are few lenders that will step up, pick up all these files that nobody else wants, and becomes the new powerful lender going in the future. We don't know who that is at the moment, but we definitely are experiencing National Bank, RBC being very, very strong right now.
Okay, thank you, Daniela. From this perspective right now, we had this conversation with Pavel that in a case that the financing cannot be provided by the financial body, there's a ways of a creative financing as a vendor take back, for example. And has any guidelines changed from your perspective? Like, would the bank or whatever financing body it is would they look at the second position financing by the vendor right now?
So if this is on a purchase and the vendor take back takes first position and there's no lender, no other financial institution in place, this is the greatest solution you can possibly secure in today's market. But if you have to use VTB or vendor take back to secure a deposit or down payment require, that's not going to go well with the lender, because they want to see equity and they don't want you to use the vendor's money and reduce your risk of exposure. They want you to go either, I wouldn't say half and half, but meet the requirements of minimum down payment or minimum equity in the project. So if we're talking about land, 50% is the minimum right now. You need to be prepared with 50%. VTB at 20 and 30% yourself, that is not going to happen. And again, different asset classes require different equity into it, but the lenders do not accept VTB as your own money in.
Okay, thank you, Daniela. So Pavel, maybe just a quick, brief elaboration on the VTB structure that you have mentioned before, and the shareholder agreement that you also mentioned. It's a very creative way. I'm still trying to grasp the idea.
Yes, yeah, that's this times require us to be creative. And yes, there are situations where the only way to close the gap between lender's financing and the purchase price is either that's purchaser's equity, or if there is still a gap, it's VTB vendor take back. And obviously there are situations where the first position lender doesn't want anyone even behind them, which means that VTB is not a solution. What we have done, so we had the situation, and what I suggested, what we implemented, is just to solve this problem, was that the vendor, instead of taking VTB secured on the property, took equity position in the purchaser corporation, where the provisions in the subscription agreement and in the shareholder agreement in the purchaser's corporation, allowing the vendor with his equity position to take control over the purchaser corporation. I mean, the decision making of his control in a case of a default on the eventually payment to the vendor. So that's a solution. Instead of VTB, taking equity position in the purchaser. I mean, it's a different way to achieve the same result, to secure eventually the payment to the vendor.
Okay, thank you, Pavel. So I would like to conclude our today's meeting. We've been talking for almost half an hour, and I'm sure that some of the viewers might be tired by now. So I guess as a conclusion is that in this time right now, we as never have to work really close with our financial partners, with our legal partners, to get the deal together and just take it over the finish line. And it's like I see a lot of these teamwork that I haven't seen in a while. So, Daniela, Pavel, I really appreciate you joining me on this call. And I really hope that we can get together maybe in a week or so to get some kind of a market update on the situation, what has happened over that time, and get a new and a fresh view and a fresh look on what's going on in the market. Really, thank you very much for joining me.
Thank you, Kirill. Thank you, Pavel. Stay home, stay safe. and healthy.
Okay.
Thank you, Daniela. Same
Thanks,
for you.
Daniela. Thanks, Kirill.
Thank you. Okay. Bye. Bye, everybody.
Bye.
Bye-bye.